give feedback on where we are to date. We had original webinars and sent out the letters to everybody and asked for everybody to make their selections of which option they would like to use. We did give another extension after the due date. We gave another 2 weeks extension. And to date, we have had 41 houses that want to contribute to the hassle-free product. So the purpose tonight is to just quickly give a run through of what the hassle-free product is again, just as a quick reminder. And then also to share the updated numbers if we use those 41 houses. Okay, so let's get into again just what the product was about. So the rationale of the concept. So originally the IPS concept was to offer single-family homes in the economic downturn, and as a result, the investment objective was to build residential house portfolio in individual LLCs. The idea was to build a portfolio between 3 to 5 houses. A typical investor currently has between 1 and 2 houses. The houses are typically financed at a 50% loan to value, at interest rates varying between 9.75 and 12%. Due to these high interest rates and maintenance and vacancy costs, we do find that a lot of the investors have run into cash flow difficulties, and there's also continuous struggles with closures of bank accounts in the USA. So for this reason, the investors asked us for an alternative strategy, and we came up with the hassle-free concept. So just in short, what hassle-free would entail. The idea of hassle-free is to move from individual ownership into a group ownership via the Wealth Migrate platform. So the idea would be for all the individual houses to be transferred into one holding entity, and then the owners of those houses to hold a shareholding in that entity and the share in the pool. So what is in scope for the hassle-free product? In scope was only residential properties, and what was not in scope, was still not in scope, is all commercial assets, and condos is not in scope. So for that in scope, in phase 1, we sent out all the letters, and from the feedback we got, as I mentioned a bit earlier, there's a total of 41 houses that indicated they would want to participate in the hassle-free product. And of those 41, 29 is in Atlanta, and 12 of them are in Memphis. We are still waiting for Bridge Finance to come back to us on the Memphis houses, whether or not they will be financing those. I did speak to Scott Gruber from Bridge Capital a bit earlier, still just waiting for their feedback. Okay, so what would the process be for the product once we get going? Step 1 would be the transfer. So we would buy the property at the MLS valuation. Now this is one change of what we said before. Before we presented that we would use the purchase prices of the houses. We have listened to all the feedback that we got, and we've decided now to use the valuations, and to keep costs as low as possible, we will use the MLS valuation prices. So properties will be transferred into the LLC, and we will buy the properties at the MLS valuation. The bridge loan will be cancelled in the investor LLC, and the issue of a new loan in a hassle-free LLC. So bridge will issue us new loans at 55% loan to value. Share allocation will then be made equal to the equity that's in the property in the investor LLC. So to calculate that equity, you will use the valuation of the property less the current outstanding bridge loan to calculate the equity that each investor will hold. At closing, the investor's responsibility would be to contact John Herbert to close the LLC and dissolve their personal LLCs, and also to contact Todd Baldwin to do their tax returns for 2017 and to deregister the LLC for taxpayer and with the IRS. Step 3 would be then to list. So as soon as all the properties are transferred, we will list the shares on the Tropics through our Tropics structure in the Seychelles. The pre-listing agreement needs to be approved by the listing committee. Investors will need to register on the Wealth Migrate platform, where the shares will then be allocated to you and will be managed through the platform. Step 4 would be the holding period. So investors receive quarterly dividends during the holding period, and our step 5 would be our exit strategy. So exit strategy would be in 5 years, so that's our target for exit. So that was the process for everybody who's got houses with current bridge loans in them. The process for houses where there is no current loan is the exact same process. The only difference is now that we do not have a current bridge loan that needs to be cancelled. So the property again will be transferred at the MLS valuation by way of the equity exchange. And we will then obtain a new loan from Bridge on that property to fund the project. And the equity will be calculated based on the valuation of the property, and there's no loan to be deducted from that. Again, the steps 2, 3, 4, and steps 5 are the same as what I just went through the previous one. So let's just quickly go through the roles and responsibilities of everybody. So the Bridge Capital's role will be to cancel the existing bridge loans on the transfer of the properties, to issue new replacing loans in Hassle-Free LLC at a 50% loan to value for each of those houses that's been transferred. The annual interest rates on these loans will be 7.25% that we agreed with them up to 7 years, and thereafter it will increase to 8.4%. So we have a substantial saving here on our interest rates from the current interest rates that is being paid. Bridge will again charge an origination fee of 3% on the loan amount, and they will have to do monthly bulk reconciliation of the loan payments. The Wealth Migrate role. So our role will be to manage the project from start to exit, to set up the legal and the company structures in the USA and the Seychelles, to appoint a property manager in the USA to manage these properties, to administer and pay the quarterly dividends to investors, and to continuously monitor the performance and identify non-performing houses. These houses will be sold out and replaced with better generating income properties. Okay, John Herbert's responsibility will be to do all the property transfers, to assist you guys in closing your LLCs where you want them closed, and also to set up the legal structures for the Hassle-Free product. Todd Bolden's responsibility will be to assist the members in closing of the LLCs for tax, also assist members with disregarded entities. He did not foresee any material tax issues, and the LLC partnerships should also have no issues according to feedback we've got from them. So let's move on quickly to the structure, how we plan to structure this. So the plan is to open an LLC called Hassle-Free LLC in Georgia, USA. That entity will then hold all the homes. The 41 homes will be transferred to that entity. The shares in that entity will be held by Hassle-Free Inc. in the USA, and then the shares in that will be held by the Hassle-Free structure through our sales structure, where all the investors will come in and hold the shares there. So what is our exit strategy? With the planned holding period for the investment will be 5 years. During the holding period, the investment committee will continuously review the market conditions to consider the best exit opportunity for the investors. By year 5, the properties will be placed in the market unless the market conditions prior to year 5 is favorable to exit. Wealth Migrate receive a favorable unsolicited offer, or the market conditions indicate to postpone the exit. So after 5 years, that will all be assessed again. So I think the next slide is the interesting one that everybody's probably waiting for to see, and this is an update on the numbers. So what we did now is, last time we showed you the numbers, we had a sample of 55 houses that we used to calculate the numbers. This time around, we took the actual 41 houses that indicated that they would want to participate, and here are the updated numbers that we calculated. So on the updated numbers, our internal rate of return before tax comes to 12.06%, and after tax it's 8.89%. The investment income is the average cash and cash income, as some people might also know it, comes to an average of 4.4% per annum, and there will be quarterly distributions to that amount. As you can see, there are also indicated what the year 1, 2, 3, and year 4 to 5 returns would be. So the lowest return would be in year 2 at a 4.0%, with the highest expected return in year 5 at 4.8%. Then the above hurdle income. So if the income ever goes above 7%, the above hurdle, so that the return that we make above the 7% will be split between the investors, getting 60% of that. The sponsor, Bridge Capital, will give 15% and Wealth Migrate 25%. At the end of the investment, when the investment is sold off, the capital gain split will also be in that same proportion. If we look at the capital appreciation from, if we look at the capital appreciation from 5 to 8%, we use a capital appreciation of 5% in our model. That gives us the IRR of 8.89%. If we were to increase that capital appreciation to 8% year on year, that will come to 11.26%. So that's just to give you guys an idea of what happens to the internal rate of return if the value of those assets increase between a 5 and a 8%. Okay, so assumptions that we use. So let me just quickly come back to the above hurdle income return that we showed here. This is just built into the model. It's our normal investment structures that we do use, but we do not foresee any of this happening because our income should never go above the 7%. So just to put you all at ease, all income up until 7% are distributed directly to the investors. It's only when it goes above 7%. Okay, just to come back to some of the assumptions that we did use in the model. We used the 41 participating houses. We used annual rent escalation of 3% with a vacancy factor of 5%. We used a property management fee of 10% of the gross rental income. Previously, we used 8%. We thought we tried to negotiate with the property manager to get that at 8%, but they indicated they would not be able to do that, so we increased it down to the 10%. Monthly Wealth Migrate management fee of 2%. Wealth Migrate equity raise fee of $3,000 per house, and this will be part of the project cost at inception. Bridge origination fee of 3%, as I mentioned earlier, and the interest rate will be 7.25% on the loan. Just also important to note here is that there is no additional cost to the investors, so there will be no cash needed from the investors for this product. Your equity you will get by way of the house that's transferred, the value of your equity, so there's no further money that needs to flow from you for this product. And the value of the houses is will now be based on the MLS, which is the multi-listing service value, and not on the purchase price as originally agreed. Okay, so those are the expected returns. Let's move forward. So let's look at the current annual cost on hassle-free, your current actual cost on your current houses versus what it would be on hassle-free. So if you compare the cost lines, insurance, there's an average of $657 per house that will remain. The houses will still be insured. The management agent commission will stay at 10%. Your landlord protection of $399 will stay the same as well. Property taxes currently on average on this portfolio is $1,328 per house, so that will remain. The big saving comes in at the average ILC cost. So currently the average ILC cost per house comes to about $2,487, where our local structure cost for hassle-free is $25,100. So this equates to 10 individual houses. So you can see that we have a big saving in the structuring cost when we go into LLC. And then accounting fees is included in the LLC cost. The accounting fee will now only be on one LLC and not individual multiple LLCs anymore. So LLC closing costs for owners. Legal cost, we got these quotes from John Herbert. He said it will cost between $450 and $550 to close and dissolve the LLC. On the tax and accounting side from Todd Baldwin, he could not give us a cost. As he said, that those costs will vary dependent on the amount of work that is needed. So you would need to contact him to get a separate quote on your LLC on that regard. Okay, what are the advantages and disadvantages of hassle-free? So on the advantages, we say we have a reduced annual structure cost. We have lower funding rates, the 7.25% interest rate. That's less than what you currently pay at Bridge Capital. You would not have a need anymore for individual bank accounts. There's only going to be one bank account in the name of Hassle-Free from where everything will be managed. You've got a lower SA tax implication, where you will now only be taxed on your foreign dividends at 20% versus your current tax rate of 45% on your personal income. The management of this will all be done centrally, so you would not have to be involved in the management of the property. What we also plan to do is to purchase additional houses from the overall increases in the loans. So on the 41 houses, we calculate that we should be able to acquire between 3 and 4 additional houses. So these houses will also be put into the pool to improve the returns. That was already included in our modeling that we did. There's no monthly mortgage payments to be done by the investor. All of this will be done through the project. And non-performing houses can be sold out and replaced with better houses. So disadvantages of this is that you will now only receive money every quarter with quarterly dividends being paid. You will not anymore be the sole owner of the property. You will be an owner of shares in a company that now owns the properties. All the houses with no loans currently will now have loans attached to them. And you might have a possible tax implication, but that has been mitigated through Todd Baldwin, and he foresees that there shouldn't be any material tax implications. Okay, what are our conditions to proceed? So for us to proceed with this product, we would need all the investors to verify that they would still want to proceed in the product. So we've got the 41 houses that we need to be confirmed. We set a date for that for next week, Wednesday, the 2nd of August. Also, if you haven't indicated that you want to form part of it, you still have time up until then to include your house in the Hassle-Free product. So you can still come back to us to say that you want to form part of that. By the 2nd of August, we would need a minimum of 40 houses to proceed with the model. And then the financing and structure still needs to be approved by Bridge Capital. I started off by saying that Bridge Capital still needs to approve that they will finance the Memphis houses, as we have 12 of the 41 houses in Memphis. So we're waiting for them to come back to us on that. Thank you, and that is the feedback that I have for you tonight on the Hassle-Free product. I don't know if there's anything to be added. Michiel, I don't know if you want to add anything. Otherwise, I'll have a look and see if I can see if there's any questions. If there's any questions that comes through.
Yeah, thank you, Jacques. Thank you for everybody online. We had such wonderful feedback, and I think we've proven that we really listen, especially on the purchase price. That was a key consideration for a lot of people. So that at least people that's got houses over 3 years that made already good gains would capitalize on it. And yeah, as part of our action would be that if you decide to continue, then we'll obviously give you the current evaluation of your house to help you understand if you should go ahead. On the 41 houses, we have done all the evaluation already, and Jacques will send it out to the investors that has already confirmed that they want to continue and just get their final buy-in. And hopefully, I think there should be more investors that previously decided against it, so that we can make this a product to go. We're also very clear that if we can't make the minimum, we'll look at the 40 houses, around about 40 houses. It's not going to absolute 40 houses, but we want to make it at least economical sense, so that the economies of scale would benefit all. So we'll make that call by the end of next week after your feedback on Wednesday. So yeah, we're very clear that we really would like to do this if the investors wants it, and we look really forward to your feedback. So Jacques, back to you. If there's any questions, let's go through them one by one and see if we can answer them.
Okay, thank you very much, Michiel. I cannot see any questions coming through at this point in time on my side. There's nothing I can see coming through. So if there's any questions we're missing, then please email us maybe just afterwards, and we'll reply to you on the email. Yeah, sorry, Michael, I can't see any questions coming through.
Hi, Jock, there is questions. I'll just see if I can try and send it to you privately, okay?
Okay, thank you very much.
Lonnie, what I would suggest we do in this case is maybe just read out the questions and then we can answer it.
Okay, there is some questions on what is MLS evaluation and how can one find out what it is?
Okay, so the MLS valuation is a multi-listing service. So this is a property listing service that all the property agents in the USA use when they evaluate their properties. So we have a property agent in the US that assisted us in pulling these reports. We as the public cannot draw the reports, only a property agent can pull this for us. So, and the valuations are based on the demographics in the area, looking at houses that has been sold in the area and the average sales price of those houses in the recent past. So it's much the same as in South Africa, where our state agents also uses MLS valuation. It's much the same basis.
Yeah, it gives comparable sales, and it's just a nice formal report that we can get. Is we've compared it to Zillow and the others, and we found that from our current experience with around about 3 years in Atlanta, etc., we're very clear that this gives a fair view. It's a fairly formal system, and we get a formal report as an evaluation, and that's our suggestion in order to not do a formal evaluation, which would cost quite a few dollars, and we found this more or less to be achieving the objective.
Okay, thank you, Lonnie. Any more questions?
Yeah, I've got a question. Sorry, Lonnie, I've got a question in parallel. Simply somebody WhatsApped me. What the question was is how would a client benefit at the exit of the sale? I think what is maybe not so obvious to everybody is that if we exit, you would obviously have your original capital that will come out of the deal, and then depending on at what value we sell the portfolio, you would have additional capital gain. So effectively, initially you will not do a cash transaction, you will do a share swap transaction, and then when you actually exit the deal, you would get your equity that is now equivalent to your net equity that we enter into this deal. That equity will be paid out on the platform, plus obviously the capital gain that has transpired through the, say, 3 to 5 years holding period of the project. Thanks, Lonnie. Next question.
Next question, will we be able to get the MLS valuation before we finally decide to participate, and by when will they receive the valuations?
Okay, so on the current 41 houses, we have requested these valuations, so we will have them available if you want to see those before the time. If your houses was not part of the 41, you will need to then just send us the address of your property so that we can then request those valuations from the agent that we're using in the US. So that normally takes a day or two for them to send it to us. So please send us the addresses of your properties and we will request that.
Okay, next question. Are Wealth Migrate charging $3,000 for all properties, even those on a mortgage?
Yes, so for each property being transferred, we will charge a fee of $3,000. So that's all those houses, whether they are bonded or not bonded. So that's for all the work that we need to do in getting all the documents signed, all the setup and structuring costs. So yes, it's from each and every house. But just to be clear, that cost is not cash payable by an investor. The $3,000 form part of the project cost, so all of that goes into the project. And the returns that I showed earlier is after taking into account those costs.
Okay, Jacques, there is one or two clients that asked with regards to partaking in hassle-free but in the LLC because they've got commercial investments as well. Would that be possible to participate in the hassle-free in one's LLC?
Yeah, thank you for that, Lonnie. The idea with the product was that the shares would be held in the Seychelles structure and transferred into the individual owners' names and not to be held in the LLC. But I don't know, Michiel, if you can maybe give some clarity on that.
Yes, Lonnie, we will consider that on a case-by-case basis. We definitely can accommodate an LLC investment in the hassle-free fund with the understanding that that investor has to maintain his own LLC for at least the duration of the residential product. So on a case-by-case basis, we will evaluate and it is possible.
Perfect, thank you, Michiel. Then there's I think we've about covered it, but I've got some questions that came through with regards to the Memphis properties. Now there is some owners that's got Atlanta and Memphis properties, and it wouldn't not make sense to put the Atlanta in and not the Memphis because that defeats the purpose of the product. So how long do we know how long it's going to take before we've got confirmation on the Memphis properties in terms of whether they'll be able to do hassle-free or not?
Yeah, thank you for that, Lonnie. I did speak earlier to Scott Gruber from Bridge Capital. He will be looking at that, so he will come back to us with an answer no later than Friday. So Friday would be the latest date that he will come back to us. Hopefully by tomorrow, but he committed to come back to us.
Yeah, Jacques, I think in principle, Scott Gruber has said that he will most likely do it, so we're fairly confident that he will actually agree. He just wanted to make sure that there's no real funny property in that, and because he was not originally part of the Memphis sourcing of the deals, and he's actually from Memphis, so he knows the market quite well. So he just asked for an option to review, but our understanding is that it's a very positive option to review, and the likelihood of that's going to pass is quite high.
Okay. Thank you. Lonnie, is there any more questions?
Yes, there is more questions, but I think let me just go through them because I think we more or less covered it. And if there's any questions that's unanswered, then I will get the responses tomorrow. Let me just check if there's anything else that I can see. Okay. Here's a good one. What is the position regarding tenants who hold purchase options on the houses that they rent? As Atlanta is rent-to-buy properties.
Okay, so the properties will just be transferred straight into the hassle-free product. So from a tenant perspective, there shouldn't be any change. We are in conversations with RJ as leases expire and new leases are taken out, that we take those clauses out of the contracts. So, but that will happen throughout the project.
Thank you. There's one client that said, thanks for the effort for making life easier. I think that's really nice, and you guys really appreciate all your hard work. Just give me a minute just to get through all these questions, but I think we've covered most of it. If there's anything else on the questions, please put your questions in now. Okay, on the question of the tenants with rent to buy options, what if the current tenant exercises the option to buy? What happens?
What I can answer the question is, over the last 3 years, the likelihood of that happening is actually zero. So what RJ specifically is doing is we are asking to transform all the leases into standard 1-year leases with deposits. And what we are going to do is when we are evaluating the specific property, we are going to basically ask RJ to approach the tenant and get a clear understanding if they're going to exercise the option or not. And if they're not, we are going to try and get that, let's call it option removed, so that we don't have that situation in the project. So that is a very unlikely situation, but that nuance or that occurrence